Hello, fellow investors, and welcome to another episode of Ritter On Real Estate, where we teach you how to passively invest like a pro. Today, my guest is Robert Preston. Robert is the co-founder and CEO of Climb Capital. He specializes in buying and selling RV parks, which is, I think, a new topic on this show and a segment I'm really excited to dig into. Before we get there, we'll give a little bit of background on Robert. So Robert started out flipping single-family homes, similar to me, and graduated through multifamily and through mobile home parks and now onto RVs. So we'll love to hear a little bit about that transition and kind of what drove that. Additionally, Robert is a husband, a proud father of four, and spent a good amount of time serving in our armed forces in the Marines as a pilot. So Robert, well, one, thank you for your service. And I'm sure you've got probably some pretty interesting stories from there too. So right on.
Yeah. Thanks for having me on the show today. It's a real pleasure. As you mentioned, right, my pre-real estate profession, I was a Marine Corps pilot for 15 years. I flew the V-22 Osprey, did a couple deployments to Afghanistan, and then coming back out of that, my real estate career essentially began, started reading books, started flipping houses, led one thing to the next, and eventually wanted to get into the passive income game side of this. And so I bought a mobile home park as our first commercial style real estate, and realized that actually it's not that passive if you're the owner, but it did very well for us financially. We still have that park. And then, we 2016, we bought our first multifamily apartment complex, 60 unit. It was out of foreclosure, pretty distressed, heavy rehab, and did a good number of those type of deals. And then eventually moved over to the RV park around 2021 is really when we got pretty heavy into this space.
Gotcha. So let's really hone in on the RV parks here. So
Okay.
you've gone through a lot of different investments, and you've obviously honed in on RV parks now. What is it about RV parks right now that make that a good investment?
Yeah. So, coming from a perspective of having sponsored and managed, some mobile home communities and apartment communities, there's a good way to contrast them, I guess. And something that, there's some positive and negatives on both of them, right? And, as we continued to learn and develop our investment strategy, one of the main reasons we went into the RV park space was that there's just far less competitors from the investment standpoint, right? There are some hurdles that you have to overcome to get into the RV park space. But, when we were trying to buy, your C, B class apartments, it was common that we'd be outbid by millions of dollars, based on our underwriting strategies, and have, multiple bids from other investors. And so that was actually the genesis that started us looking for something else in general. And as we found the RV park space, we realized that there are just far less investors. There's far less sponsors right now. That is changing, but that was kind of the kick in the butt that pushed us this way. And so, we're typically buying properties at, 9 caps, 10 caps, 11 cap rates, even a couple of years ago. So those spreads were pretty significant.
Gotcha. So it really was seeing this opportunity to go to a market that's less saturated.
Yeah.
That you had some personal knowledge on too, right? Because you spent a good amount of time in an RV.
Yeah.
So you have that boots on the ground knowledge, firsthand experience.
Yeah, there's some lifestyle component of it for me for sure.
Mm-hmm.
At the end of the day, like I don't take my family on vacation at the mobile home parks or the the workforce housing side of it. But we love to load up the motorhome and go, go find a new property, go check on the existing properties. I found I think so far I found two deals that we now own by simply going camping and going on vacation and loading up the family and talking to the owner. So there's a lifestyle component of it that is much more fun and enjoyable if I'm being honest.
Yeah, absolutely. And where are your parks located?
So we actually have a property as far west as Arizona, right outside of or in Page, Arizona on Lake Powell. And then we've got a property, outside of Charleston, South Carolina. So we're spread, east to west that way. And then I live in Florida. We got a good number of properties here in Florida, and then all the way up to Cincinnati. So our target market, what we're really looking for is what I would classify essentially as the Sunbelt. And if you looked at a map and looked at the interstates, basically I-10 to I-40, Arizona to the Atlantic coast is really where we're targeting, where we like to buy.
Gotcha. Okay. Tell us a little bit more about that. Why is that your target market?
Yeah. So particularly and it's a really good question, because there are a lot of parks. Like, I'll use an example of the things I don't buy and why. I love to be out in Wyoming in the summer. I love Montana. Phenomenal parks, absolutely beautiful out there. If anyone's ever been out there, there are some amazing parks out there, and of course, amazing country. And so that's awesome during the summer, but of course, no one goes RVing in the winter, and so that's just right now a region that the northern regions is just something that our business model doesn't operate us around the seasonality of shutting down a park in the winter. So that kind of excludes the northern part. And then we actually are finding the heat does the same thing. So your South Texas, and maybe extreme South Florida, South Arizona, states like that, we're actually finding, I think, heat drives decision-making process faster than cold. So like this summer we had, those massive heat waves out there that drove people inside like faster than any cold streak does. So all to say is the weather drives a good amount of our decision-making process, in the quarter that I like, i.e. Pensacola, Nashville-ish think of those type of towns. You have two peak seasons. You have a peak summer vacation season of people going to the beach or going on vacation. You and I taking the family, kids are out of school. So you got a peak season in the summer. And then you essentially have another similar type of peak season where you do have the northern states, Canada, snowbirds that are moving down, your retirement couple essentially. And so if you looked at it like a sine curve, essentially I've got two peaks every year, and then I have shoulder seasons, and demand does drop off of there. Vice Wyoming, as an example, I would have 100% occupancy for 6 months, 5 months, but I would have 0% occupancy there. And so it's part of a lifestyle decision as well. Where do I want to go? But ultimately I want revenue all year. I want the most occupancy we can all year. So it's a long answer to a short question, but that drives a lot of where and how we look at is the seasonality.
I gotcha. Now that makes a lot of sense. So it's really around the ability to have folks at your park year round.
Yeah.
And the ability to have that consistent revenue stream coming in and not have to go through the ebbs and flows of starting up and shutting down the park.
Absolutely.
Gotcha. Talk just briefly about, because you've got parks all over. Talk about a little bit about your operational model. I mean, how do you manage those parks? Who's on site managing? And what are the layers? Where do you fit in? And what does that look like?
Yeah. And that actually ties in well with the last question. So one of the keys here is great people. I mean, you got to have great staff at the property. And so if I've got great staff and I've hired them and I found them, and then I have to shut down for the winter, they've got to go do something else in life. Right. And then I got to rehire them the next summer. So that's actually one of the big drivers of having consistent staff. And so the way that we do this and the way that we are able to operate is essentially in the RV space. This is a key part, is that most sponsors that are successful here are entirely vertical on the management side. You essentially have to have your own management company as a component of this. And so we have that. I have a president who runs that company. It's a subsidiary of our company. He runs that company. We utilize and operate the EOS system, Traction. I'm sure you guys have heard that.
We do as well. Yeah.
Yeah. Awesome. Cool. So we stick to that pretty rigid for both companies, Climb Capital and the management company. And of course, most of it's virtual, right? Because the park managers check in. We have all our meetings online, just like this, once a week. And staff-wise, essentially, we would have a general manager at each park. Typically, sometimes it's a husband and wife, a lot of times, but we'll have a general manager who is the manager of that park. And then they'll utilize some work campers, some part-time staff as needed, plus up, plus down during the season. But we put a lot of effort and focus on hiring that key person that runs the park. And we encourage them to think, and we're recruiting them to think like an owner. So prospective future park owners, right, is a perfect manager for us. We want, at the end of the day, we want them to move on from us as an owner. So we want them to think like an owner, like an entrepreneur, and run that park like as if it was theirs. And that's been pretty successful to us.
Gotcha. Do the people that run the park live at the park, or are they just local?
It's about 50-50. It's common to have a manager that lives at the park. It's pretty common. Some of the older parks that were built, right, we are buying them off the original owner, the mom and pop, and they built a park around their home. So a lot of times there's a pretty decent single family home on the property that works out really well as a bonus or a compensation package for that manager to be able to live on the park.
Gotcha. Very nice.
Yeah.
You mentioned earlier there are some hurdles, kind of some barriers to entry into RV parks. What are some of those hurdles?
Yeah, there's two big ones that most people, need to think about and consider. And one of them is the management. So, most other sophisticated asset classes, there are pretty competent, even national, publicly traded management companies that you can hire and put in place for pretty reasonable expenses. So there are a few third-party management companies in the RV park space. There's not many, and I would argue there's probably not any that are exceptional. Nothing to deter from the existing companies. It's a newly developing space. So unless you have the ability to manage and operate the park, that essentially precludes you from owning more than one park, right? So, you and I are sponsors. The idea is to grow a portfolio, have assets under management. And so if you are unwilling or don't have the ability to self-manage, right, you could buy one park and run it yourself, and that's it. And so that's a big barrier to entry. And the second is the debt. Again, it's not a sophisticated asset yet. So there's not institutional level debt for the most part, which means, most of the debt that I get or place is through a community bank, through a regional bank, through a credit union, owner financing, creative financing. And very, very common, I'm personally guaranteeing the entirety of the debt. And so that is something that's probably not very typical compared to other asset classes where the sponsor is willing to personally guarantee the debt. And so that's a big limiting factor right now. Both of those are changing and evolving, but right now those are big barriers to entry.
Understood. So those are two great barriers. One is management. In that it's a little less sophisticated. You've got to be willing to do it yourself and build your own company out to get multiple parks. And two, same thing with the financing. It's just not as sophisticated right now. And so you're working with a lot of community banks or credit unions, and you're going to be having full recourse debt or some sort of recourse debt. And you have to be willing to take on that risk. But it sounds like the trade-off are significantly higher cash flows, maybe double what you would see, on some multifamily properties or other types of investments.
Yeah, absolutely. Right. So risk, reward, workload, all comes, it's part of the thing. Like I said, I mean, typically, we're not buying a park for anything less than a 7.5 cap, even if it's, you would consider it an A-class park, right? But most of the stuff we're buying in the 9s, 10s, sometimes even, 11, 12. And that's in place. And we can very quickly, the next thing you got to think about is like, what makes this a good investment? So we're buying
perfect segue.
Yeah. Buying it at discount versus what you can buy other assets. So it should be in place cash flow. And then very, very common, there's a lot of fruit on the vine there from just easy operational things. Simple as implementing websites, social media things, marketing programs, dynamic pricing. So we can really increase revenue pretty quickly without essentially any CapEx. There's no loss to lease, right? I'm renting by the night, by the week, or by the month. So the maximum loss to lease expense I can have will be a month as I adjust rates back to market. So those are really easy operational efficiencies that generally drive cash flow quickly. Of course, NOI down to the bottom line there. The second component is commonly, a lot of these parks come with a lot of acreage that is unused. And, if you think about a typical park that we buy, it's probably about 100 sites. It's got a clubhouse. It's got maybe a pool. It's got the roads and stuff in there, and it's on 40 acres. So there's tons of unused acreage. And we can go in there and build additional sites for very, probably average probably, I would put us around 12,000 a site to build a new site. Right. But that site's going to bring us 5,000-ish in revenue per site per year. So you're recapping your CapEx money in a little bit right around 2 years. Because that big infrastructure, the big cost of the roads and the clubhouses, all stuff's there. And so, unlike an apartment complex where it's a little bit difficult to just add units, this is pretty easy to expand on a lot of this. And so, that's a good example of I guess, the CapEx that both drives your equity and drives your yield pretty quickly.
Yeah, I appreciate that breakdown. I think that's really helpful to understand. And there's
Yeah.
a lot of value creation. It sounds like it's the industry, the I guess asset class is still in that phase where you have a lot of mom and pop owners, a lot of
Yeah.
folks who are just comfortable with where they're at. They're not looking to take it to the next level. And so there's a lot of fruit on the vine, as you said, to come in pretty quickly and easily. It sounds like if you have the game plan and increase revenue and improve your investment.
Yeah. Just, one more practical example. We bought a park. The nightly rate was $38 a night, and we thought the market was 45. So we changed the day that we bought the property, we changed the website, changed the rate, and now we're charging $45 a night. So that doesn't sound like much, but if you extrapolate that out for the year, essentially we've increased the gross revenue 20% with changing a number on a website. And the cool part is the customer, yes, they care, but if they're staying 3 or 4 days, they're talking about maybe a $20 or $30 change in their bill. That's not significant. So it's this little bit of power or law of small numbers, small changes, huge magnitude. At the end of the day, there's not too many people that it actually affects, and it's better for everyone. So it's kind of a neat little thing that we discovered in the beginning of a quick way to create a lot of value very quickly.
Yeah, that makes a ton of sense. It makes a ton of sense. It's a small change to the individual, but
Yeah.
all those small numbers add up to a big number at the end of the day.
Yeah.
I'm curious.
Go ahead.
What's
Sorry.
that? No,
I was going to say it's pretty hard to increase your rents, 20% at a multifamily deal.
It
So
is. We've done it a few times, but you got to buy it.
yeah,
You got to find a good value for sure.
for sure.
No, I mean that is very compelling. I'm curious, what are some of the other things that you do outside of just raising the lot rent to create value on these properties?
Yeah. So value to us, right, is increasing the rates, decreasing the occupancy, of course, and then adding more sites. But value to the customer is also pretty easy too. Internet Wi-Fi is essentially a utility now, and a lot of these old parks either have no Wi-Fi systems or very poor, and so that's one of the first things that we're doing and upgrading from a CapEx expenditures. Most of the time, we're able to bring 1 gig high-speed stuff into the park and disseminate that through much better infrastructure. So that's a huge amenity to the existing customers, and a huge draw or attraction to the oncoming customers. Simple stuff, right? Landscaping, bushes, all that perception type stuff you would normally put in a multifamily or mobile home park. That adds that perception. Same process, but probably a little bit more bang for your buck, because that's actually what people are coming to see and do, is to be in nature and to be outside. And so those are ways to add benefits. And then the heavy CapEx side of it is, adding more amenities, pools, pickleball courts, washer dryer, arcades, golf cart rentals, all these ancillary revenue type things that are also an amenity for the customer.
Gotcha. I mean, it makes a ton of sense. It follows the same model, but it seems like you're really able to make a big impact. And like you said, people are coming there for the scenery, for those amenities. And yeah, very good. Makes sense.
Yeah.
So thinking about your experience in this space, you obviously have years of experience. You've run multiple parks all over the country. I'm sure you've had a lot of lessons learned, as anyone will, as they spend a lot of time doing something, right? So boil it down for us, help people understand what are some of the pitfalls, maybe what are the top 3 things, 2 to 3 you could call out to help folks avoid those same pitfalls as they look at these opportunities.
Yeah, actually some similar lessons that I learned in multifamily as well, but it has to do with size. The first one, like at the end of the day, people cost a lot of money from the perspective of staffing, and RV parks, it's not a downside, but the trade-off is you have an apartment complex, you got some pretty high repair and maintenance, right? With the RV park, I don't really own much besides a parking lot. in some utility systems if you broke it down. So my repair and maintenance is pretty low, but my staffing and payroll cost is significantly higher than a multifamily asset because I'm effectively running a hospitality business with a real estate component of it. Whereas with multifamily, right, you can have managed, a lot of units with just a few staff. So I've got high payroll, right? So all to say that the lesson we've learned now after we own 13 parks, we had 14, is that it goes to the same thing. If you don't have enough site count, if you don't have enough revenue, you can't have good on-site management. If you don't have good on-site management, you're going to have a lot of headaches. And so we bought some smaller parks, had to learn that lesson. If we ran those smaller parks more like a mobile home park and rented only by the month, then it's very doable. But if you're trying to run that hospitality retail business with a smaller site count, you really essentially can eat up all that new revenue in your expenses, primarily on the payroll side. So that's the biggest learning point, that's kind of come out for us this last year, is making sure that we adapt the right strategy to the right park from a site count, instead of trying to say, we will operate all of our parks with this X model, which is, 50% retail and 50% long-term. So now we really adjust that very quickly to make sure that it fits the site count. Does that make sense?
It does. That's a great lesson learned. I think it's that scale matters, right? And there's a lot of economies of scale as you grow. And that's true with a lot of different real estate investments, right? So it sounds like it holds true in RV parks as well.
Very, very similar principles. There are a lot of similarities. There's a lot of components there. There's some tweaks and techniques and things to think about, but at the end of the day, you're still running an investment business, based off of income and expense, NOI.
Yeah. Anything else to share as another lesson learned, maybe over the 14 parks you've managed?
Yeah. So the regionality, seasonality thing is something we're gathering data, understanding. The opportunity in RV parks is there's not a lot of aggregated data like there is from CoStar or something. So you got to learn, it's a lot of the old school, like talking to other owners and gathering data. So understanding the seasonality of weather and how that affects has been a big part of what we learned. And that's, I mentioned that's kind of now driven our buy box. So what we learned is not too far north, not too far south, not too hot, not too cold, not too far out of in the middle of nowhere, right? People want to be in nature, but they don't want to be like really, really out there for the most part. So staying close to interstate, staying close to even tertiary, it doesn't need to be a big city, but having something for them to drive to is pretty critical.
Gotcha. All makes a ton of sense. And Robert, I appreciate you breaking down mobile home parks, or excuse me, RV parks for us. And it sounds like a really compelling investment opportunity. Sounds like you're, a little bit of an early adopter on the curve as far as bringing more of a sophisticated capital into the space and sophisticated operators. So I think exciting opportunities ahead for you guys. But before I let you go, I'm going to take you through our keys to success round. Got 4 questions to ask you. Same 4 we're asking everybody. First one is, if you were going to make an investment with someone else, another deal sponsor, and you could only ask them one question, you don't know anything, what is the one question you would ask?
How do you manage the property?
How do you manage? Yeah.
I mean,
that management, that really makes or breaks, right? Whether you're talking apartments, you're talking mobile home parks, you're talking RVs, really anything related to real estate, it's going to be that on-site management, that experience they give to the customer, right?
Yeah, that, you could have the best deal on paper and buy it at the best price, and it can be ruined in 6 months with bad management.
Absolutely.
So it's just critical. You probably are not going to win with management, but it will kill you.
100%. 100%. We've had our own struggles in the past and a ton of lessons learned around that. And so I adamantly agree that finding good management is critical.
Yep.
Next question is, what are you most proud of in your career?
Man, I would say now I'm pretty proud of like the number of jobs and opportunities that this has created. And so very quickly, we went from being 2 guys, Jeremy and I, who were sponsoring, raising capital, to now, there's 50 people employees in our organization. And then, so creating the jobs, I'm pretty passionate about that. I love that part of it. And then seeing like the progression of some of the employees from being a tenant to now manager to now owning their own home to like starting to invest at a smaller scale. I love that part.
That's awesome. You guys are creating a ton of opportunities, and generating a lot of, sounds like positive things in the economy and really impacting a lot of individuals' lives. So a lot to be proud of there.
Doing our part.
Yeah. What's a book that everybody should read?
Man, I love to say Rich Dad Poor Dad. I'm sure that's been said like 95 times on here.
It's a classic.
It's a classic. I love Pitch Anything, Oren Klaff. And maybe a less known one back there in the background is The Creature from Jekyll Island. Very interesting expose on the Federal Reserve System and banking in general.
That's a great book. Very timely with everything going on in the news right now. The Fed's in the news every week with something going on related to rates and debt and everything else that's impacting the economy. So that's a great education. Yeah, all of it. And last but not least, Robert, what is your number one key to success?
One of our core company values is grit. And that's, I think, hard to define, but at the end of the day, that's kind of the key here. Is like there's a lot of tough days. So you just having the ability to push through and fight through, and for the investment, for the investors, for the company, for us. So I would say grit is my key to success.
Absolutely. Absolutely. And I think time and time again, that's a common theme on this show. The people that are successful, the people that have stayed in it and gotten through the hard times and gotten back up when they've been knocked down. So appreciate you sharing that today. Appreciate you sharing all the info and bringing so much value to the audience. If folks want to learn more about what you're doing, they want to learn more about Climb Capital. How can they reach you?
So our website is climbcapital.com. It's CLIMB capital.com. My email is robert@climbcapital.com. And then my cell phone is 850-712-5139.
Excellent. Well, we'll make sure all that's listed in the show notes so people can reach out to you. They can learn more. And Robert, once again, thank you so much for coming on today, sharing your value. And I hope you have a great rest of the day.
It's my pleasure. Thank you.
Thanks for listening to another great episode of Ritter on Real Estate. Hit the subscribe button to make sure you don't miss out on the content that will make you a better investor. Also, visit KentRitter.com for articles, videos, and tools curated just for passive investors. Until next time, this is Kent Ritter with Ritter on Real Estate. Now go out and invest like a pro.